Yes, my people, hope you're all doing well. After watching this video, hopefully you should have no doubt about exactly where you should enter your trades based on the concepts we're going to talk about to get those super nice sniper entries. So if I were to show you this chart here, you can see we're in a clear uptrend. So in an uptrend, we're only looking for buys. Now, you might look for areas of demand in here to buy. So we can see we have a nice zone in here. And as you can see, we have a nice zone in here. So this is where the break of structure occurred. And this is where we form zones. Now, it comes down to three main things as to where I know to get the perfect entry from. Is it going to be from this zone or is it going to be from this zone? Which one is going to be high probability and give me that super precise entry? Like I said, it comes down to these three things. So the first thing is inducement or liquidity, whatever you want to call it. What is liquidity? Well, in an uptrend, we look at lows as liquidity. So in this example here, or areas of support. We can see here, price is forming an area of support. So this becomes our liquidity. What is price going to do? Think of liquidity as fuel for your car, as petrol for your car. If you need to go anywhere, you need to top up and then you need to go. Same thing with the market. If the market wants to head higher, which we've established because we're in an uptrend, we need to get this fuel to go higher. So we need price to sweep this and then continue higher. So we need to look for liquidity sweeps, otherwise we are going to be part of that liquidity. Now the second step is looking at actual mitigation of the zone. What I mean by that is we want fresh zones. We don't want expired zones, right? This here would now be an expired zone because price left it, filled in these orders, pushed up. We need to think about this as a supply and demand sort of structure. Here supply tried to kick in. It pushed price lower. Demand beat supply and broke the high. So we know there was area of demand here because it broke these sellers here. Buyers are present here. They have a lot of orders filled in there. Some of these orders didn't get filled. So price is going to come back to fill the rest of their orders and then continue higher. Now, if I'm looking for still another buy in this zone, I need to know these orders have been filled. It's possible, but the chance of price sweeping this, coming back into this zone and then pushing higher is less likely. Why? Simply there is less orders to push price higher. So zones that are fresh, such as this one here, price has not tapped back into, and this one here, price has not tapped back into, will always be the best. Now the third and final step is simply we want it to have caused a break of structure in our zone. Here you can see we have a high and we broke structure. So we want it to be between this high and our protected low. We're looking for demand zones between here and here. This demand zone is resting here. So this is going to be favored over this one because this one wasn't a part of external structure. We want our demand zone to be responsible for breaking external structure. So this more time is going to act as liquidity, and then we can come down to fill this zone that was responsible for the break structure where the impulse, where the origin was, and then continue higher. So we need liquidity within our zone, we need it to be fresh, and we need it to be responsible for an external structure. And just in case I haven't touched on enough about liquidity, liquidity will be something like this. Right, in this scenario, I'll favor this zone because can you see we have liquidity resting in our zone, which is just the first tap that pushed price higher. We can then come, this is still fresh because all these orders haven't been filled. So then we'll come sweep this, tap into here, and then get the real move higher. Before I go to live trading chart examples, I do want to say I am now starting to take applicants again for my one-on-one trading mentorship. If you want me to help you become profitable and hold your hand every step of the way, the link to apply is in the description below. So let's see what we have here. In this live chart example, we can see price is clearly trending lower. So we can look for breaks of structure. we have a break of structure to the downside here, and we have a break of structure to the downside here. Now, bear in mind, which zone am I going to use? Am I going to use this one? Or am I going to use this one? Now, let's talk about the first one. The first step was liquidity. As you can see, this higher zone here, do we have liquidity within it or just below it? We can see price left, pulled back and moved lower. So this is beautiful inducement. You can see this is liquidity. A lot of people have their stop loss here. It makes sense that if price wants to go lower, we should come take this high first. This is our fuel, and then push lower. We can look for extra confluences that this is strong, such as we've created a little fair value gap there. So yeah, we know we're on the right side of the market. Now, how about this second zone? Does it have any liquidity? Well, we've left the zone, and as you can see, we're forming no liquidity on the retracement. Where can we sweep from this high? From this high to this low. Where is something that we can sweep and then dump lower? Nowhere. If we're going to sweep anything, it looks like this high is the one to be swept. So I wouldn't really look for an entry in this lower zone. Now, in terms of mitigation, the nice thing is both of these were unmitigated. You can see this completely fresh, beautiful. You can see this, right? As we retraced into it, it was unmitigated. Again, this had nice displacement out of the zone, had liquidity, unmitigated. This one is always going to be favorable. This one is going to be most likely be liquidity for this higher zone to push the market lower. So let's check that out. Perfect. As you can see, we swept that liquidity, tapped into this zone, and then decided to push lower. So beautiful and simple. Now let's go to a bullish chart example. I do want to mention, for anyone wondering how I do draw my supply and demand zones, I literally have a full guide on this YouTube video from about 2 weeks ago. So yeah, feel free if you're not sure how to find your areas of supply and demand. This is more about finding the right ones and the super precise ones. So let's go on to this example here. Now we can see price is clearly trending higher. So we're looking for longs. We have a high here. We candle close above, giving us a protected low down here. So let's look at areas of demand within here that we can catch to push higher. We're looking at mitigation and liquidity. And because we're looking solely at from here to here, we know that this area of demand will be responsible for the external break structure. So that box is already ticked. We just want to find ones that are nice and fresh and have nice liquidity. So let's look at the last bearish move to the downside. From here to here, you can see internally we were doing low, high, low, high, low, high, high. So really we formed two areas of demand. We have this one in here, right, and we have this up to down here. Now which one is better? Which ones should I frame my bias off? Well, firstly, let's just purely focus on this high one, right, from this high to this low. Let's see if it fits the criteria. So we've already established they've both caused an external broken structure, so that's fine. Is it got liquidity in it? We can see price left, small tap back in, pushed higher. Nice. This has got liquidity in it. First box ticked. Second box, is it still fresh or not? Well, we can see all these orders here are still unmitigated. Price hasn't returned to come fill in all this space here ever since we left it. So yeah, 2 out of 2 box ticked. So this can be a great zone to use. How about this first zone or this origin zone we have here that we mentioned? Okay, do we have liquidity in it? Well, yeah, we left the zone, we came back, we pushed higher. So this could be a valid area of liquidity. But what about this makes me instantly think, I don't want to use this zone. This liquidity, this tap that we came in that pushed price higher, look how much of it mitigated this zone. We filled in all these orders. All these orders that pushed price up, came in, filled in those buyers again, pushed price up. What's the likelihood of coming again, getting more orders and pushing higher? A lot less likely. If we come back and take this low, we're most likely going to get a shift in structure, and I should stop looking for long. So this immediately makes me want to eliminate this zone and purely focus on the zone we had previously, which was from here to here, and this liquidity in here. So this is my high probability zone. This is where I know I can get a good entry. So let's just say we enter at 50%, stop loss below, and target a higher high. We'll play that out. Nice, we get tagged in. Nice, we smash, take profit. Look how stress-free that was, simple that was. And we know if this is breaks, we're likely to take this low. So we don't need to have an SL at the protected low. We can have our SL at this area of demand. Beautiful entry, slight drawdown, it is what it is, stress-free, and then smash, take profit. Yeah, thank you for staying at the end of the video. I really appreciate it. I hope I was able to provide some value. If you did like the video, I appreciate any likes, any subscribes. Any questions you have, feel free to drop them in the comment section below. And like I said, I just reopened the one-on-one mentorship. So if you want to apply for that, link in the description. And I do have a premium Discord where you can watch my full course on exactly how I trade using this strategy, and watch me live trade every single day to actually show it in action. Apart from that, appreciate your time as always, and I'll catch you in the next video.